What's up, guys? I figured I'd do a second video tonight. I just wanted to go over a tweet that I made, or a couple tweets anyway. Basically, kind of going over recent action in the market and how to continually dial in based on what's happening, what you see, and things like that. There's a lot of times when you can be sized up and you could be on the right side and everything's going right, but what happens is you start to get biased, you start to believe in your trade, you start to think that that nothing can go wrong, and a lot of times we start to get the highest conviction on the lowest quality plays. We start to forget that at the end of the day, it's a very trash name, it's a very low quality name. So something compared to like Bank of America or CGC, or a real name that has real volume, real action, and is not one PR type wonder, one and done type trade, or in this case lately, a couple days raise and then fade. So situations like this, it's very easy to get complacent and continually be kind of rewarded for being patient with the winner, but at times you start to kind of see it go sideways, and what was working and what was paying out and what was not really a problem on the front side now becomes almost like a 50-50 type of will it consolidate and break out, or will it consolidate and break down? And so you always have to kind of check that dial. Where is it along the the squeeze mode? Is it still in squeeze mode? Where is it as far as where's your conviction? And where's the volume? What's happening? And you're checking all these different dials as far as what is my size relative to the trade right now. And in a situation, and a good example today was on MBOT. And, a situation like this, it was fantastic off the open. I mean, it was a nice squeeze. They were obviously gapping it up on the, giving the low float and whatnot, and it was going nuts. And then they ended up raising. And so ended up going quite a bit higher, faded off, and then all of a sudden it just took off like crazy out of the open. Look, it was 300 some odd thousand shares, and I mean, when it trades 30 million, 40 million the day before, and again, the same amount today, that's nothing. And so the fact that it ripped on that let them, obviously be able to raise some more money later on in the day. But you're on the right side, everything's great, all dips are getting bought, and you even over here, all the lower all the lows end up being higher and higher and higher. They catch next push keeps on going. This is the first point where it starts to peak out a little bit, and it doesn't mean that it's a sell, but it's a point where you need to reevaluate. Okay, do I have too much? Am I still pushing the envelope? Have I added too much? Is my risk in check? If this were to pull back, given the fact that it just went from 9 to 18 and it literally doubled in an hour, is my risk in check if it were to retrace half of that move? And a lot of times you'll probably find that it was not. So it doesn't matter if it could squeeze higher, it could keep on going. You can always add back. But more often than not always, and we always want to catch the dries type move, or the VLTCs, or whatever that one was, or the KBIOs, or the LFIN. It would be great, obviously. 10, 15, 20, 50 to 100, 150, you name it. It would be a fantastic trade to catch, and that's what we all, want. But the reality is that it's very rare that happens. So if you are letting that trend work and you're letting size work, then more often than not, the numbers say that it's going to fail. So it just always is a way to kind of recheck, make sure that if you're trading these types of names, trash type names, anything for that matter, but more often than not, these types of momentum stocks, it's always good just to kind of recheck to see where you're at along that dial. And so a situation like this, each time that it tests, obviously you can see it's got a nice little base here at the 16, I guess you could call it 1650s, 1680s or so. There's obviously some support. And, it pulled back, got saved, higher low, and it's still even in a trend. But at this point, where it kind of pushes and it fails again, you've also got some volume associated with that. At that point, you're really, really, playing with fire. Even after this one right here, you're playing with fire. You can go back and you can say, oh yeah, this was a lower high, so you should have been out. But I'm not trying to play the hindsight game. What I'm trying to show you is that if you are sitting in a name and you've got some great profit, and I'll show you also on SAEX, and I didn't have the best exit on it either, but if you're sitting in a name and all of a sudden you go from squeeze mode to, okay, well, this could break out or it could break down, or it could break out or it could break down. That gets into 50-50 or even less. And the risk is not is not in your favor, and or the reward is not in your favor. It's more towards the risk. And you start to, it almost turns into a gamble. And more often than not, if you're at the casino, you're going to end up with less than you walked in with. Same thing here if you go to the casino. And obviously I ended up cracking, and that's fine. That shows what most of these things do, but it's just a constant reminder that in this area, if you were playing dips, was it really worth it? Was the reward on your side, or did you end up overstaying and it was a low quality play? You didn't recheck your size versus the type of play. It wasn't in squeeze mode anymore, and it turned into a 50-50. So anytime that dial starts to turn towards 50-50, you should reevaluate the size that you have. And I guess the same thing could be said for SAEX. And again, one of the things I mentioned is sometimes we get rewarded for a poor decision. And whether or not my decision was poor to swing this name, I felt like I had a good read on it, and it was kind of squeezing up each time, and I was doing a good job selling into the ramps. But this day right here, I was also buying into the dips and whatnot, and I had a 380s kind of swing average, and then I added some at 4s. I had gotten some pre-market. I had already sold some into this ramp, and so I had a realized gain, and so I was taking on a little bit, not aggressive risk, but I was taking on a little bit of risk by kind of holding it in throughout the day, just because we are on that backside, the same thing that we saw on MBOT today. So if you were to go back, then obviously this is failed follow through, and it's kind of dribbling along at the 420s, and at any point this could crack. But I went ahead and stayed with it, and I got rewarded for that. I got rewarded very heavily. It was a very big trade, and it worked out really nicely because it also went up to over 630s or so after hours. So, that is rewarding me for probably a poor hold, but intuition was right, thought process was right, and, it ended up working out. So flash forward to the next day, and so it kind of reconfirmed that maybe even though it did kind of fail to follow through, kind of did the dribble, it did wash out, it reaffirmed that, you probably should hold, because so far you've had the right read on it, your intuition has been correct, and so it caused me to think that yes, I should probably do this, because that seems like the right thing to do, because last time I was rewarded heavily for it. So because of that, I ended up ignoring the fact that it actually stuffed into VWAP. It actually failed into VWAP. And granted, I was selling, and so I ended up buying the trade that I made. I had it in the morning again, and I had a swing on it, but I had a pretty decent unrealized gain. And, I did take some off into the pops and whatnot. I got a great entry over here, 550s. Whether that was smart or dumb, who knows at this point. But it was a good entry, ramps up, and so I went ahead and locks him into this little push here. But I ended up just going ahead and kind of ignoring the fact that this pushed and shoved into the VWAP level. And if you're rechecking your dial and whatnot, if you're on the back side of the move, and then it pulls off, then it starts to grind, and then it stuffs and it fails at VWAP, it starts to bounce and bounce and bounce, your risk just got elevated by double, triple, quadruple. And so because I didn't go back and check my dial, I ended up giving back a good chunk of my unrealized gain just because I ignored this, because last time I got rewarded for a bad decision, and this time ignored it, and then I ended up kind of riding it down towards the mid fives on the last batch of what I had. Now, there was a couple things that kind of made me think that it might trap back up, and one of those was this rip right back, and it kind of looked like it was going back down, and it was going to trap right back up, and all of a sudden there was actually a decent sized bidder at 590s, and I was hitting out. And then they refreshed again, and I was like, maybe I should, calm down a little bit and wait for the squeeze. So, long story short is I kind of got blinded by maybe the bad decision the day before and ended up giving back some of the gains. Now, the good part is I stopped out, and it wasn't horrible, and I saved also a nice loss here. There's no reason to hold it all the way down there, but this is a perfect example of being rewarded for the wrong thing and then having it end up, screwing you on the next trade. So, another one that you can kind of see is just, rechecking. Say you're short. So, KTOV. So, say you're short on something like this KTOV. And I'm just going to talk about, I'll go back to the chart in a minute here, but KTOV 240 becomes the big level, and I would not want to be short if it goes over 240s. Okay, so the thought process here is, again, just a level that would cause me to make a change in my trading. So this is a nice trade today. I got long pre-market just because, once again, the other thing to kind of understand is what type of market are you in? And right now we're in a fantastic chasers market. So normally I would ignore this. I'd wait till the open. But I just wanted to put on a feeler trade, 133, 135 range. And the reason for that I kind of put in the room was that this high right here was 135. So if we break over that and then it comes back and basically consolidates over that level, then we have a chance to go. Otherwise, if it had just touched it and pulled back, then we're likely going to just sell. So anyway, that was a great trade, and it ramps up and so on and so forth. And I definitely minimized the trade. I was long. I was long a few more times. I had a couple decent trades on there, but then a lot of people associated the momentum with MBOT. MBOT created a bunch of momentum in the small cap world. And so when MBOT cracks, everybody's like, okay, KTOV is the next one to crack, because everybody's excited about that, and then everybody gets fearful on this one. So ended up snapping, and I was like, great, because I put on a few just small, just in case that was to end up happening, and it did. But one of the things that you have to understand and watch for is that if they end up supporting it, all those people that just hit it thinking that it's going to be at MBOT, and especially if MBOT keeps on going lower, people are going to be more aggressive and more aggressive and more aggressive. So if that ends up being the case, then we're going to get a nice squeeze back. So what I do is I look for the areas that are going to make me recheck my dial. So if I'm short and it starts to kind of base, and it did here, and you can see that kind of consolidating, and it's a hindsight type comment here, like, yeah, okay, 210's based, and then it started to grind back. But you don't know that. You don't know that at the time. You don't know where it's going to end up basing and rebounding. And for me, I mean, there's no reason why I wouldn't think that this is going to go to 170s by the close, based on cracking, and slowly fading off. But if it comes back through, reclaims VWAP, starts to go, and then that level that we found earlier, 240s, as sort of that magnet level, if it reclaims that level, game on. Because now all these shorts that just hit it and got pretty aggressive within 240 level are now, their padding's gone. And it's unlikely that they were going to cover because they were only up 20 cents or so, and they were probably looking for a longer game. But 240s, reclaims, game on. So I had covered before, and I wasn't really sized in. I wasn't really confident about the trade just because the price action that I saw. But had I been short and say I was aggressively getting in short, say I nailed it 250s or 260s, 250s, and then I started to scale into the pops. Okay, boom, I get the same conviction because I nailed it. I nail it here, and it's starting to give me that bias and that conviction that everything that I'm doing is right. I've nailed both tops and so on and so forth. So now if it washes out, game on, et cetera, et cetera. But then all of a sudden it starts to hold. So if it goes back to that level, this is the dial that I'm talking about, another example. But where is it that you need to kind of reevaluate your size? You have to reevaluate your trade idea, and whether or not the risk that you have on right now, the size that you have on, is in check with the potential move if it were to break that level. So that's why a lot of times you see the fast moves and whatnot, but it's just these are the types of areas that will cause me to go back and make sure that I'm sizing properly. I don't have too much conviction on any one side, because no matter what, even if it's a piece of junk and even if it ends up at 1 tomorrow, that doesn't mean that it can't go to 4 or 5 in the meantime. And the one time that you usually think that, no, there's no way this thing can go that high, it can. And so those are 3 good examples of just areas of interest that will cause me to go back and just make sure that my trade plan is still the same one that I went in with. And if at any point it changes, if any point something stuffs, if any point you have lower highs or you have a crack, that should go and cause you to reevaluate, okay, maybe it's time to size down a little bit. Or should I really be adding to this? Because it's in a downtrend. Shouldn't I be waiting for it to maybe break out? Something like that. And then the last note is on that same kind of comment. If we were trading SAEX, say we wanted a squeeze on something like this, and it's a great trend, but I don't want to be buying dips or breakouts or anything like this until it's over the highs and holding new highs. Because anytime that I would want to add or size into a trade on a situation like this, I want to be upset that I missed the entry. I want to have a hard time getting filled. I want it to keep on going and be like, oh, I missed it again. Oh, I missed it again. And because if that's the case, then that means you're on the right side. A lot of times if I'm short something, and I'm very good at kind of picking spots where it's going to wash out to and usually covering within a few cents of the bottom. And I remember on IGC, there was a time where I had quite a few short, and I was like, oh, I missed it again. Oh, I missed it by a penny. And anytime that somebody's right there, right ahead of me, I always know I should probably just swipe the offers because it never ends well. So in a situation like this, similarly, if each time it rebounds, you're filling and you're adding. Now you're ruining your average. You're bringing your average higher and higher and higher. In the event that it pulls back, now you have too many, too high, and your risk is at the highest point. You want to continually add on dips once it breaks each level. You don't want to anticipate the breakouts of those levels, because if you do, then that's when you're going to run into issues. If your thought process is a squeeze, then let it prove to you that it wants to squeeze. I'd rather buy this at 670s on a dip after it comes back from 680, 690, add some at 670s, 680s, whatever, rather than anticipate that it's going to break this triple top or something like that. Because if it doesn't, then you just brought your average from, say, 6 or 580s to 620s, and all of a sudden it pulls back, and now you lose 40 cents, 50 cents. So anyway, that is the thought process that I just wanted to share, that I kind of put out a few tweets on tonight. Just always reevaluating where you're at within your trade, and hopefully this helps. If not, feel free to ask more questions in the comment section. But definitely leave me some feedback if it did help. And I hope you guys have a good trading day tomorrow.